Hey, it's Ted McGrath. Welcome to today's show. So I'm going to jump in and give you some bearish news based on what's going on with the oil situation and start off with some bad news on that. And then I'm going to flip to some bullish news and give you a different point of view. Of course, this is coming from Tom Lee, who's bullish in March. And I'm going to give you data on why he says why he's bullish. But before I do that, I'm going to get in. I'm going to show you a trade that I lost money on today, not because the indicators were incorrect. The indicators were right. I got greedy. I was up and I got greedy and I lost. And I'm going to show you how I'm doing this on a daily basis so you can see the technical analysis, because despite all the news that's going on, differing opinions, the technical analysis is spot on. The news is not. So I'm going to give you 2 points of view and you can make your own decision. And I'm going to give you technical charts that are better to listen to. So we're going to jump in right now. Remember, none of this is tax advice, financial advice, or legal advice. Do your own research. So we're going to jump in and I'm going to show you very briefly just a specific trade that I made that did not do well. And I'm going to show you why here on this particular scenario. Okay. So if you're looking at the chart right now, you can see here that when I'm trading this particular chart that I'm showing you, this is an example of a 2-hour chart that shows you that BMNR was bearish today. And so when I'm looking at this particular chart where BMNR is bearish, I'm trading on the 2-hour and you can see how clean it is. And this is where I lost money today. It's very clean. It shows you that it's bearish. So on the 2-hour chart, I place a trade and follow this every couple days, sometimes every day. And this just tells you like it's bearish overall today. So this started flashing yesterday, if you can see on Monday, March 3rd, and I picked up quite a bit. Of gains yesterday, making 6.5%, and then today we still were flashing bearish. And so per the technical analysis, I was going to place a trade that was bearish to get out of BMNR, and I'm going to show you on the 3-minute charts here kind of where this happened this morning. So had I listened to the technical charts and just taken the move, because remember the day was starting bearish because it shows you that it's yellow. And so when you look at this here, this is about a market open here where it went bearish. And you can see this red here where it's just sitting bearish. And so I got out of the trade initially here where BMNR was around 1960. And I wrote it all the way down. You see BMNR was about $19.20 here. So you look here, wrote it all the way down. So this is just bearish. I got out of the trade and I would have picked up there 2%, which I did pick up 2%, just following this bearish trend. Okay. But then I got greedy. And instead of getting out with a profit, like yesterday, I got out with a 6.5% profit. Instead of getting out with a profit, I got greedy and I stayed in, and then I lost money today. So the point is, during these markets, I would say like over the last month, I've got about an 80% or more win ratio. And the only time I would have a 90% if I didn't make dumb, greedy moves once in a while. And so when you look at these charts, if you look at the 2-hour, it tells you what's happening from a longer term perspective, meaning like a 2 to 5 day perspective. And so this tells you on the blue when to sell out here. Blue to yellow means sell out. So when it's fat yellow, you just get out and you ride it all the way down. And when it's fat blue, you get back in and you ride it up. And that's as simple as it is. So I will place trades on this, and I'm doing very, very well trading BMNR right now. And I'm also trading some derivatives of it because look how clean these signals are. So the lesson today is the technical analysis is super spot on and it works. And the news I'm about to share with you, I'm going to give you I'm going to give you differing viewpoints today in the news. And you can decide which viewpoint you want to go with. I am pretty much ignoring the viewpoints, except from the perspective of just wanting to be in the know, have knowledge, see what people are thinking about the future. But when I'm making my investment decisions, I'm purely sticking to the charts. Yellow to blue, I buy. Blue to yellow, I sell. It's really that simple. This is Trading View and Invest Answers together. This is how I make my decisions. I'm going to be sharing a lot of this with you because it's just been super helpful for me over the last 30 days and I'm winning big on BMNR trading it over the last 30 days. So I wanted to show you that. All right. So there's times where I follow the technical charts, and 90% of the time I will win when I'm following the technical charts, but I factor in a 10% loss ratio on top of that. So 10% of the time I'll make a greedy move. And when I make greedy moves, I typically lose. And today I lost. Yesterday I won big. So that's the lesson of the day. When you're in profits, take some profits, get out. All right. None of this tax advice, financial advice, or legal advice, but now I'm going to get into the rest of the show. Oh, and if you want any data on this, down below, on how I'm doing technical analysis and actually making long-term investment decisions based on the charts, and also trading every couple of days on the charts, you can get it down below, 100% free. There's a full video on how I do it, and there's my book called Money Game that you can snag for free down below. Okay, let's get into the rest. So if we look at what's going on in the news today, we got all kinds of stuff happening. We got crypto, Iran war, oil shock. Geopolitics could delay the bull run. Now, again, this is one point of view. I'm going to give you a bullish point of view at the end. The core problem that we're seeing in the marketplace is the war tension. It's no secret. There's a war going on, right? Markets are now pricing in some serious stuff because of the disruption of the Strait of Hormuz here, right? This is one of the most important oil choke points in the world. And if it closes, this is a point of view that oil spikes, inflation rises, rate cuts get delayed, and crypto struggles. So this is the point of view that rate cuts would get delayed because oil would spike, inflation would go up, and then the Fed would be hawkish. Now, Tom Lee has a totally different point of view I'll give you at the end, where he says that the Fed could go dovish. So totally different points of view. One needs to make up their own point of view on things to be successful, is my belief. But here's why the Strait of Hormuz matters. 20% of global oil flows through it. 21 million barrels per day are at risk. Even partial disruption equals instant price spike in oil. So you see the breaking news here. Iran closes the strait, warns any ship passing through will be set on fire. Roughly 20% of the world's oil supply passes through this strategic waterway, and there it is located. I know you've heard of it before, but in case you didn't know where it is, it's right there on the map. It's good to see, right? If oil goes above $90 to $100, inflation comes back fast. The Federal Reserve could delay rate cuts, could delay. Again, this is one point of view. Tom Lee thinks they could cut rates as a result of this. So we'll see what happens. Again, that's why I stick to the technical charts, and that's how I make my decisions of what I was just showing. Liquidity could stay tight in this scenario. I'll explain to you in a moment why Tom Lee is bullish in March right now for crypto. Now, this is the effect of a 10% increase in oil prices on inflation. You see how 10% increase in oil. This is the idea that there could be an increase in basis points on the interest rates, and interest rates could go up in this scenario. Okay. And crypto needs liquidity. And we know when interest rates go up, not typically good for crypto, right? Bitcoin's immediate reaction on this. We saw this, days ago this happened. So I'm reporting what happened over the last week. We had 128 million liquidated in 4 hours. If you look at the data from CoinGlass, again, this is not today. This is from days ago. 80% were longs, traders lean bullish, the market punished them fast, and Bitcoin dropped towards 63,000. So in case you weren't watching over the weekend, Saturday plummeted down towards 63, rebounded quick to 68,000. We saw a run up yesterday towards 70. So there's just uncertainty of what's happening in the marketplace right now. But the one thing is certain is Bitcoin is low. BMNR is low. MSTR is low for sure. Okay. The current price is around, this is from the other day, but the current price now is 68,000 plus. So it's up. The bounce looked kind of mechanical the other day when it happened, not confident. But what this tells us is this wasn't bullish buying. This was 4 or 5 days ago when this happened on Saturday, or 3 days ago. Leverage got wiped out. Open interest was cooling. And what happened to my screen? And desks were cutting risk. So that was kind of the idea of what was happening from that perspective. Okay. So leverage got wiped out. That's why you saw the drop to 63,000 the other day. Classic pain behavior, a lot of selling first and then reassessing later. But Bitcoin's definitely not acting like digital gold at this point. We all were expecting this to happen. Crisis hit. Is Bitcoin going to act like digital gold? It is not acting like digital gold. It's, in fact, during stress events right now, Bitcoin's moving with tech stocks. It's moving with S&P 500. It's moving with high risk assets. And it is not decoupling at this point. So in a real energy shock, investors don't rotate into crypto. They de-risk everything. All right. So liquidity becomes the real safe haven. The bigger threat is oil above $100. Again, this is one point of view. I'll give you a totally different point of view with better news at the end here. So if crude oil holds above $100, inflation could spike again. Rate cuts could disappear. All right, this is just one point of view. I'm going to state that again. Okay, yields could rise, risk assets stay capped. And if you look at this is this guy Alex Coe saying Hormuz stays contested. What happens if oil hits $100? 15 million barrels offline. And then you got Venezuela, you got Iran supply gone. OPEC can't fill the gap and at $100 oil. And then you could have inflation resurging. The Fed might hike and not cut. Emerging markets could crash. And it could be a crap show, right? But if you look at this right now, here's kind of the signal framework right now. When oil's less than $70, we're green, we're in the clear. When oil is $70 to $80, there's caution, there's amber. And then the stress alert, here's where we are now. Oil between $80 and $100 in stress mode, and red crisis mode would be greater than $100. Possible we're heading in that direction. Okay. If you look at the VIX, $22 to $30, that's the volatility index, which is tied to the S&P 500. Most of the time, long-term investors like when the S&P 500 is more calm and it's more predictable, and they're willing to put their money in there, and it's going to be a stable run up. When the VIX is higher at 22 to 30 versus the VIX being at 18, it means there's more volatility. And people who are stable, safer investors don't like the volatility. It brings uncertainty. Volatility means it could go up a lot or it could go down a lot. We don't know, but stable investors don't like that kind of stuff, particularly people who invest in the S&P 500. So the VIX is higher right now. You got the DXY, the dollar volatility right now in terms of the dollar index. The DXY is the dollar strength in comparison to other currencies around the world. Right now, the DXY is volatile. So, a lot of times people don't like volatility because they don't like uncertainty, which is why they pick different assets that are safer. Now, clearly, people invested in Bitcoin, people invested in MSTR, BMNR like volatility because volatility is vitality, as Michael Saylor says. But in this case, there's lots of uncertainty happening right now. If the US 10-year pushes towards 5% again, the crypto rallies likely stall. Again, this is one point of view. Tom Lee is bullish in March, and I'm going to share with you the bullish perspective in just a moment. But the 10-year, what's the 10-year about? It's basically when the government lends money to people, right? People invest in the government in the 10-year, and they'll be like, here, government, take my money. And then the government pays them a rate of return. Right now, it's about low 4%. If it pushes up to 5%, that means that people will put their money with the government and lend their money to the government because they're like, oh, the government's giving me a 5% safe return. I should give them money. And that means that people put money into these safer assets versus into these risky assets, right? And then if the 10-year goes up to 5%, that means that corporate lending gets more expensive and mortgages get more expensive and borrowing money gets more expensive and your car loans get more expensive, and nobody likes that crap because inflation is too damn high already. The inflation they report on the news is not the true effect on your dollar. It leaves out a whole bunch of stuff, and so inflation is more than 3%, or at least when you factor into account asset inflation, CPI, and you take into account the printing of money. It's the reason why you go to the grocery store and you're like, why the hell is everything so expensive? Or you go to buy a new car and you're like, how did your average car, like a nice car now, just is over $100,000? The most beautiful car used to be $100,000. Now it's like a nice car is $100,000. Like, what's going on in the world today, right? So the only support is capital flight, or it's one viewpoint of some support. I shouldn't say the only support. There's a counter force out there in parts of the Middle East. Stablecoin demand is rising, so that's good news. Tether usage is increasing. That's good news. And Bitcoin can be used as an escape valve for some people. So that's good news. Retail crisis buying. So sometimes retail comes in and start buying, but it does not equal large institutional outflows. So the macro is winning the game. When the institutions are selling, that's not good for the macro. The macro dominates. We know this is more of a retail game now. We know by BMNR and MSTR, you look at the number of institutional investors are growing in MSTR, growing in BMNR. Lots of big money are flowing into those stocks. So the macro is really dominating the game at this point. Altcoins are already feeling it. Without fresh liquidity, Ethereum struggles, small caps weaken, momentum fades quickly. No liquidity equals no sustained rally. On the other hand, the flip side point of view, Tom Lee says that the Iran war won't stop Ethereum's March rally. So you got a totally different viewpoint on this from Tom Lee. Okay. Again, I shared with you a moment ago, if you're just joining the show, when I'm making my investment decisions, I like to gather data and I like to be informed, but I am not listening to any of these opinions at all. When I'm making my decisions, I am simply watching the charts. This is how I make decisions. On the 2-hour chart, I am trading on a daily basis, BMNR and MSTR. Blue to yellow, I get out. Yellow to blue, I get in. It's that freaking easy. And that's what I'm doing on a weekly basis and sometimes trading on a daily basis. And then longer term, I am looking at the daily charts, which does not mean that I trade or invest on a daily basis. From an investment standpoint, I am looking at the daily charts. And when you look at these charts, and this is going to be an eye-opener here, if you look at BMNR, look how yellow this is. This goes all the way back to October. I'm going to show you this for a very important point, because it turned yellow on BMNR in October, right after we had the liquidation event, October 10th, and BMNR was at $53 when it turned yellow. I don't pay attention to a thin yellow. When it gets fatter yellow, I pay attention. And at $51, it got fatter yellow, and it's like, get out of BMNR. And you look at this, and this is from an investment decision. You don't have to trade at all to pay attention to this. It's been yellow ever since October 20th. No sign of blue. So when this returns from yellow to blue, I will know we have some type of real rally happening with BMNR that's more sustained. All right. That's from October 20th, November 20th, December 20th, January 20th, February 20th. We're almost into March 20th coming up soon. That's 5 months without bullish indicators on the daily chart. So when I'm looking at investing, I'm paying attention to the daily chart and I'm looking, it's yellow, man. When I'm trading, I'm on the 2-hour chart that shows me yellow to blue buy, blue to yellow sell. That's simple, okay? You don't have to be a mathematician to figure this out. You don't have to have a master's degree in finance to figure this stuff out. You don't have to listen to politicians to figure this stuff out. And you don't need to listen to experts to figure this stuff out. You can make decision on data versus opinions. And I think, there's a lot of opinions. Like, I don't have an opinion on what's going to happen over the next 12 months with BMNR and MSTR because I just don't know. I had an opinion of what was going to happen in last year. That came true for a big portion of the year because I bought into MSTR in 2024 in the low hundreds, and then MSTR rocket rided up, and I thought it was going to boom even higher in November and December, and I was wrong. So with that, the fact that the game has changed, I don't have opinion in December of 2026. I'm just following technical data right now, and then I'm zooming out the noise. And I highly suggest, I think data and charts are more important than what somebody else is telling you based on their opinion. Even if it is based on data, have them show you the data. Make sense? So that's how I'm making decisions. So with this data that I'm sharing, this is opinions. And there's different sources like Tom Lee that's giving his opinion. But Tom, I think Tom's fantastic, but Tom's been wrong a lot too. Recently, he's been wrong a lot. Over his career, he's been right a lot. So on the other hand, Tom Lee says the Iran war won't stop the March rally. Again, this is just an opinion. He says March is going to be a turnaround month for the better. I hope he's right. I really hope he's right. But I am not going to hope on that. I'm going to look at the charts. And when these charts turn on the daily, I'm going to go back to the daily. When this goes to blue, that's when I'm going to enter a big position into BMNR. And then I'm going to ride BMNR up for the longer term and hold it during the blue bullishness when it comes. The blue has not come yet. So there's lots of talk about bullishness. It's not here. It's nowhere here. And you can see how accurate these charts are by going back and looking at them. All right. If you want more access to this, go down. There's a video for free that shows you how I make decisions on this. 20-minute video, totally free with my book. You can snag that down below. Okay. And this technical analysis, by the way, is you need TradingView to do this technical analysis. You need Invest Answers. I have zero affiliation with them. I'm just spreading good word because they have good technical analysis. All right. So with Tom and what he says, March is going to be a turnaround month for the better. Right. So let's break down why he's confident. Ethereum is bottoming. Ethereum has fallen more than 50% since October's big liquidation event, but Lee says price action is showing signs of a bottom. So if you look at Ethereum, that's the price point right around now. And when markets bottom, recovery often follows. So if this is the bottom, that could be true. Ethereum's already up 9% this week, trading around $2,000. If you look at it right now, to be precise on where it is, it's at 1981. And he's bullish because of tokenization. Now, I fully agree with this long-term viewpoint, and I think the long-term viewpoint is based on data and is super intelligent, because tokenization is really taking over the financial world. And it's, if you've heard me talk about it on this channel before, I did a whole show on it 2 days ago, but where tokenization is turning real world assets like real estate, stocks, or bonds into blockchain based digital tokens. So in simple terms, what that means is you're going to be able to trade 24/7, 365 stocks, bonds, real estate on the blockchain. And the cool thing about real estate is, like, somebody can take a real estate property, they can slice it up into all kinds of little pieces, and your average person who couldn't afford to buy a $100 million real estate piece can then own a piece of that property or a piece of that portfolio on the blockchain, and it makes it easy, and they can buy it 24/7, 365, which makes it simple. So the blockchain is definitely the new financial technology in the world today. There was a great video I was watching the other day. I think his first name is Gordy, and he was talking about why the blockchain is essential, particularly with AI. And with AI coming into the picture, you're going to need greater security out there in the world of finance. And the current traditional financial system does not lend to that type of security because it's old technology. The blockchain is new technology. The fact that you can trade and invest 24/7, 365 is amazing. The fact that this opens up the customer base to financial institutions across the world. Like, if I'm a Fidelity, do I want to have access to customers only in my pool and in my locations where I'm allowed to get customers, or do I want it on the blockchain where I can get customers all across the globe? So financial institutions, like, for pure money and greed, going on the blockchain really behooves them because it really speaks to their pocketbooks. And so you have a better technology, number one. You have a more secure technology. And with AI and all the scams that are taking place out there, you're going to need blockchain security and blockchain technology to actually prevent hackers and make it harder for them to access your stuff. So that's a good thing as well. And then ultimately, if you look at the number of financial institutions that are building on the blockchain, on the video that I did the other day, I mean, it's just staggering, the large institutions that are moving and building on Ethereum. And the majority of it is taking place on Ethereum. And so almost every major tokenized fund is launching on Ethereum. I've gone through this many times, but you look at the different funds that are being launched on Ethereum. Even PayPal has their own coin right now. JP Morgan, BlackRock, and we're talking about them moving very safe investments onto the blockchain. And they're moving just boring stuff on the blockchain, money market funds, cash equivalents, things like that. But they're moving on, and they're moving on in a big way. Swift, I gave a little presentation on this the other day. Swift processes 11 trillion payments per year. It doesn't process it, but it sends the message from bank A to bank B so that money can be sent between institutions. And so it's responsible for the messaging that leads to $11 trillion worth of transactions in a year. And so Swift is in partnership with Chainlink, and they're now involved in a blockchain project that they've been working on for years and years and years. So more and more of this stuff is happening. If everything is built on Ethereum, or a lot is built on Ethereum, the price eventually follows. So the long-term thesis that Tom Lee has with Ethereum, the long-term thesis that he has with BMNR is extraordinarily sound. Again, that's my viewpoint and my opinion, but the data points to it on the number of institutions that are building on it. So Wall Street is quietly positioning themselves there. It's not like this is sometimes in mainstream media, but not really, because the mainstream world doesn't really understand to the degree that we do. And they're not informed like we are. They're not watching shows like this. So it's still very new. The way that institutions move are a lot slower. And so, and then once these institutions get on the blockchain, they need to be positioned and regulated in a way to where they can offer up these products in a way that consumers can actually consume them. And Strategy is a great example of this, because Strategy was first to the game. And so when you look at BlackRock and these companies that came in 4 or 5 years after Strategy's been at this for 5 years. So let's not forget that Strategy's been, working on this for 6 years now, since 2020. And so with 6 years ahead of the game, they've been able to create products for consumers in the marketplace where there's more and more people investing in products like Stretch and Stride and Strife and these more fixed income type products. Even though they're preferred stock, they're more type fixed income type products metaphorically. And so more and more consumers are getting involved and strategies getting the word out there. What's going to happen 5-6 years from now when companies like BlackRock and companies like PayPal and the Swift network and partnerships they have with Chainlink and Ethereum, when they all catch up with strategy, because strategy was a first mover, they're going to be in a very big position like strategy is, and you're going to have institutions dominating the blockchain and offering products and services all over the world. And that's going to bring more retail demand to the marketplace, which will then, in my opinion, push the price up. So that's what we're looking at. BlackRock, even during the crash over this time, this speaks to BMNR, it increased its Bitmine holdings by 166%. So big institutions are leaning in on tokenization, and they're leaning in on BlackRock. If you watched my video the other day, I did a table of the number of institutions that have increased their position quarter after quarter into BMNR, and there's lots of institutions layering in and putting lots of money into BMNR. So that's a good long-term sign, but it doesn't change the short term. Beast Industries called Ethereum the backbone. So if you look a Beast saying we're big fans of Ethereum and calling it the backbone of stable coins and highlighting its role in DeFi. And so if you're new to this, I'm sure you've heard already that BMNR has partnered with Beast Industries and invested $200 million into Beast Industries. Super intelligent move. They're going to capitalize on a huge percentage of the marketplace that is not aware of BMNR, that's not aware of Ethereum, aware of Bitcoin, or invested in it. Even if I look at this channel, the number of people who tune in here, the average age or the minimum age is around 45. So most people are over 45. So when you look at Beast Industries, they're going to be spreading news to the marketplace of people in their 20s, people who are in their teens that are eventually going to be in their 20s and 30s. So the younger generation is going to start to get more and more data about crypto, more and more data about BMNR, and that's going to bring a whole nother group of retail investors into the game. So when you look at the future of where we're headed, it is extraordinarily bright, extraordinarily bright. There's so many reasons why institutions are moving onto Ethereum or onto the blockchain, why Bitcoin is the leading asset in the world, in my opinion, and at the same time, why the future is incredibly bright and why more and more people are going to have to move onto the blockchain because it is a superior technology. All right. So there's lots of data pointing towards that. BlackRock has increased BMNR's holdings to 9 million shares, according to its 13F filing. So that's what I just said, 165% quarter over quarter increase. The stake is valued at approximately 246 million. That's big, big stuff. So Wall Street isn't running away. It's building. What about the war? Markets are worried about oil spikes and disruption in the Strait of Hormuz. But Lee says something interesting. Historically, markets fall during war buildup and stabilize once conflict begins. So I don't have the exact data on the wars that we've had and how markets have stabilized, but he's saying this based on data that he's pulled, that they fall during the buildup. Now the conflict has begun. That's why he thinks in March we're going up. If oil surges, the Federal Reserve may turn dovish and inject more liquidity. So he's saying the exact opposite of the point of view that I gave you earlier on from some data that I was sharing with you early on. He's saying that the Federal Reserve may turn dovish and inject more liquidity. So differing points of view, which is why in the short term, I stick to just technical analysis and make my investment decisions from that. Okay. More liquidity equals bullish for tech and crypto. So that's what Tom Lee is expecting. He said crypto already bottomed after the Iran scare wick. Now time to rip higher. Y'all buying the dip or waiting for the retest. All right. So we will see who is right. We will see what happens. If we look at the bigger picture, ETH is down, sharply over the last several months. We have Bitmine sitting on unrealized losses over the last several months. Now we know they're up this week. The war headlines look scary. But at the end of the day, Tom Lee believes the fundamentals haven't changed. I also believe that too. The fundamentals haven't changed. Tokenization momentum is growing. March could be a rebound month, according to Tom Lee. And he thinks Ethereum is bottoming and ready to rally. So we shall see what happens. Some news on Mara. They may start selling Bitcoin. Why this matters is a little bit of a policy shift. HODL no more. So you have this news, the largest public Bitcoin miner, Mara, considers selling its Bitcoin reserves. All right. They're the second largest public Bitcoin holder. And so that's kind of big news coming in the marketplace. They have 53,000 Bitcoin, ranking just behind Sailor and Strategy. The largest public Bitcoin miner has expanded its 2026 treasury policy. So they've changed it. That's basically what it means. Now it can hold Bitcoin long-term, it can buy Bitcoin, and it can sell Bitcoin from its balance sheet. So we shall see what they will do. So that's a big change. This could be bearish for Bitcoin to some degree because they hold 53,000 Bitcoin. But ultimately, we'll see. Are they gonna sell some of their Bitcoin? We don't know. That's the basic point on this, and we shall see how it turns out in the future. All right. So that's the basic of what I want to share with you today. Differing points of view, one bullish, one bearish. You need to make up your own mind. Again, none of this is tax advice, financial advice, or legal advice. But also, I am using these charts to make my decisions. So if you're just joining us and you want to get access to more of my technical analysis, you can click down below and you can get a free video on how I'm trading using data and data only. Also how I'm investing and using data only based on these charts. And so that's what I would encourage you to take a look at is get into the technicals. You don't need to be a technical wizard to figure this stuff out. If you want to see how I'm doing it, there's a full video breakdown on how I'm trading down below. I'm giving, and it's free, and I'm giving you, you can just click on the link down below, but I'm giving you just a perspective here. If you want to just have a greater understanding of where the trend is going, these are great charts just to look at on the daily basis. So this is changes that happen on the daily. When you go to the 2 hour, it's changes that happen on the 2 hours, and you can see there's a lot more movement, yellow to blue, blue to yellow. But on the daily, BMNR has been flat, and it's been, or I should say not flat, bearish since all the way back in October. Right. And so from an investor standpoint, how I'm going to hold BMNR long term and enter in and get back into a bullish position in my investing will be when this turns blue. And it's not blue right now. So I, from a long-term perspective, am waiting for that to happen. So from a pure investment standpoint, this is just good data. I think everybody should have it. If you want to get access to something like this, my video explains how to operate it. But if you want access to this, this is TradingView and Invest Answers. I always want to give credit to the people who developed the tech. I have no sponsorship with them, no affiliate relationship with them, have no financial relationship with them. I'm just sharing with you good tech. All right. Hope this serves you. And if you would like to get access to my book down below, I have a book that I wrote on money games. So if you want to learn more about this stuff and just get a better overall understanding of Bitcoin, Ethereum, MSTR, BMNR, it took me about 6-7 months to write this book. It's really good. I give you the framework of, and it's free too. I give you the framework of traditional finance, which I was in for the first 12, 13 years of my career, working with a large financial institution. I was a partner in that institution. And I give you that viewpoint. And then I give you the viewpoint of digital finance, which clearly I believe in digital finance way more than I believe in traditional finance for many, many reasons that are listed in the book. And it helps you understand things like how the Federal Reserve really operates, how the history of money, the truth of the history of money and how we've evolved to this point. It helps you understand the debt crisis. It helps you understand Bitcoin on a very basic level, MSTR, BMNR, and it gives you the fundamentals. If you have the basics in life in any subject, I think you can be strong in it. But if one doesn't have the basics, like for me, if I didn't understand Bitcoin, there's no way I would invest in MSTR. If I didn't understand Ethereum, there's no way I would invest in BMNR. So you got to get the basics first before you invest in things that are more volatile. All right. Hope this serves you. Have a great rest of the day. Again, my book is completely free down below. My trading strategy is free down below. I hope you enjoyed what I shared with you today. If you like the channel, just hit the like button down below. It helps with engagement and getting more people to show up. So, and you can subscribe if you're not subscribed. Have a great rest of the day. I hope March is bullish. Tom Lee thinks it's going to be. If you missed this video, go back and watch it. It gives you two totally different points of view so you can decide for yourself. See ya.